All right, so you've given us some really interesting material on crypto trading strategies.
Yeah.
Specifically focusing on Ethereum from October 2024 to now.
Okay.
Looks like you're trying to decode a unique trading strategy, one with controlled drawdowns, built for all sorts of traders, and even automatable.
And what's fascinating here is this hedge plus code and dynamic filtering sounds like some serious algorithmic action.
Yeah.
Let's see how this plays out in the Ethereum market.
Okay, so buckle up, everyone.
All right.
We're about to uncover the inner workings of this approach.
Okay.
See how it fared in real trading.
Cool.
And maybe even spark some aha moments for your own trading journey.
Love it.
Okay, let's break down this hedge plus code.
Okay.
From what I can gather, it's all about finding those prime entry points for long positions in Ethereum.
Right.
But it's not just about jumping in whenever the price moves.
Yeah.
There's a method to the madness.
Yeah, right. The Hedge Plus code seems to be designed to identify specific market conditions that signal a higher probability of a successful trade. It's like having an algorithm that's constantly scanning the market, looking for those perfect setups.
So it's taking the emotion out of trading decisions.
Exactly. That's one of the biggest benefits of using an algorithmic approach.
Okay.
It helps you stay disciplined and avoid making impulsive moves based on fear or greed.
Now let's talk about this dynamic filtering.
Okay.
This seems to be the secret sauce that sets this strategy apart.
Right.
I'm still wrapping my head around how it works, though.
Think of dynamic filtering as a way to fine-tune your entries.
Okay.
It's like having a set of filters that adjust based on real-time market data, ensuring you're entering trades at the most optimal points.
Right.
This could be crucial for managing risk and maximizing profit potential.
So instead of just buying in at any signal, the dynamic filtering helps you pinpoint the best time to strike.
Precisely. It's about being selective and waiting for those high-probability setups.
Gotcha.
Now, you've provided a log of Ethereum trades from October to November 2024.
Right.
And it's packed with valuable data. Let's see what insights we can uncover.
You know, I love digging into the numbers. It looks like there were 14 trades executed during that period, with clear entries, exits, profit and loss figures, and even drawdown percentages for each trade.
Right.
This is giving us a real-world glimpse into how this strategy performed.
And remember, this is just one snapshot of how the Hedge Plus code performed on Ethereum during a specific time frame.
Right.
The real power lies in its potential adaptability to different market conditions and even other cryptocurrencies.
You've piqued my curiosity.
Yeah.
Before we dive into the nitty-gritty of the Ethereum trades, let's talk about this adaptability mission.
Right.
You said this approach isn't limited to just Ethereum.
Absolutely. The principles behind the Hedge Plus code and dynamic filtering can be applied to other cryptocurrencies as well.
Okay.
In fact, you've also provided some data on how this strategy performed on Solana, which is known for its volatility.
This is getting really interesting.
Yeah.
So we're not just learning about a specific trading strategy for one coin, but potentially a framework that can be applied across the crypto market.
Exactly. This deep dive is about giving you the knowledge and tools to explore, experiment, and potentially elevate your crypto trading game.
Wow.
It's about understanding the underlying logic and adapting it to fit your own trading style and risk tolerance.
All right, I'm ready to see this in action. Let's jump into those trade logs and see how this strategy played out in the wild world of crypto trading.
Okay.
First up, Ethereum.
Let's do it. Take a look at this log focusing on the month of October.
Okay.
Notice anything that stands out to you.
Well, right away I'm seeing that the drawdowns are pretty minimal.
Yeah.
Even during some of those volatile price swings, Ethereum is known for.
Right.
That aligns with the whole controlled drawdown aspect you mentioned earlier.
Good observation. That's a key feature of this strategy.
Right.
The goal is to minimize potential losses while still capturing those profit opportunities.
Yeah.
And the log you provided seems to show that in action.
And what about those profits?
Okay.
Were there any trades that really jumped out at you?
Yes, actually. Look at trade number 6. The entry price was around 2,100, and it rode that price wave all the way up to 2,300.
Whoa.
That's a pretty nice gain for a single trade.
Yeah.
And it looks like it achieved that with a relatively small drawdown.
Okay, I'm starting to see the potential here.
Yeah.
But before we get too excited, let's talk about risk management.
All right.
How does this strategy protect against those inevitable market dips?
Well, remember how we talked about automating this approach?
Yeah.
The Hedge Plus platform allows you to set predefined parameters for your trades.
Okay.
You can set stop-loss orders that automatically exit your positions if the price drops below a certain threshold, helping to limit your losses.
So you're not just hoping for the best.
Right.
You're building in safeguards to protect your capital.
Exactly. That's crucial for any successful trading strategy, especially in a market as volatile as crypto.
Yeah.
And with the Hedge Plus platform, you can essentially automate this risk management, taking some of the stress out of trading.
Right. You've sold me on the automation piece.
Oh.
But let's be real. This still seems pretty complex.
Yeah.
Is this strategy only for experienced traders? Or can someone just starting out wrap their head around it?
That's a great question.
Yeah.
While there are some technical aspects to this strategy, the beauty of the Hedge Plus platform is that it simplifies a lot of the complexity.
Okay.
You don't need to be a coding wizard or a seasoned trader to use it.
Right.
The platform is designed to be user-friendly,
Gotcha.
allowing you to set up and automate your trades with relative ease.
So you're saying even someone who's relatively new to crypto trading could potentially implement this strategy?
Absolutely. The key is to start slothing, learn the ropes, and gradually increase your exposure as you gain experience and confidence. And remember, you don't have to go it alone. There are plenty of resources available to help you learn the ins and outs of this approach, including educational materials and support from the Hedge Plus community.
I love that community aspect. It's like having a team of experienced traders in your corner guiding you along the way.
Exactly. And that can be incredibly valuable, especially when you're first starting out.
Right.
But even for seasoned traders, the Hedge Plus community can offer valuable insights and a place to share ideas and strategies.
Okay, I think we've laid a solid foundation here.
Right.
We've unpacked the core concepts of the Hedge Plus code and dynamic filtering, emphasized the importance of risk management and automation,
Right.
and even touched on the supportive community aspect of the Hedge Plus platform.
And we've seen how it played out with Ethereum. But remember, this approach isn't limited to just one cryptocurrency.
Right.
We've got a whole other data set on Solana waiting for us.
All right, let's switch gears and see how this strategy handled a more volatile asset like Solana.
Okay.
From what I've heard, Solana's price swings can be pretty wild.
They certainly can.
Yeah.
And that's what makes this next part of our deep dive so fascinating.
Okay.
We're going to see how the Hedge Plus code and dynamic filtering adapted to those rapid price fluctuations.
I'm ready to dive into the Solana data.
Yeah.
What are we waiting for?
Go. All right. So let's take a look at this Solana trade log you provided.
Okay.
It covers the same time frame as the Ethereum data, October 2024.
Right.
Remember, Solana is known for its volatility, so it'll be interesting to see how the Hedge Plus code performed in this environment.
Yeah, I'm really curious to see if those controlled drawdowns we saw with Ethereum hold up with a more volatile asset like Solana.
Yeah.
Let's dive into the numbers.
Take a look at this sequence of trades in the middle of the month.
Okay.
Solana's price was bouncing around quite a bit, but the Hedge Plus code still managed to identify several profitable entry points.
I'm seeing that. It looks like the code entered a trade around $42.
Yeah.
Wrote a price surge up to $48, and then exited the position before a sharp dip back down to $40.
Right.
That's impressive.
It is, and that's a prime example of how dynamic filtering can work in a volatile market.
Okay.
Instead of chasing every price movement,
Right.
the filters help pinpoint those optimal entry and exit points, aiming to maximize gains while minimizing risk.
Okay, so it's not just about getting in early.
Right.
It's about getting in at the right time.
Exactly.
The filtering seems to be doing a lot of the heavy lifting here.
You got it. The dynamic filtering system is constantly analyzing market data, looking for those setups that align with the Hedge Plus code's parameters. It's like having an intelligent assistant that's helping you navigate those choppy waters.
This is making me rethink my whole approach to trading.
Oh, wow.
I've always been a bit hesitant to use automated strategies.
Yeah.
But seeing how this one performed on Solana is really eye-opening.
I understand your hesitation.
Yeah.
A lot of people think automated trading means giving up control.
Right.
But with the Hedge Plus platform, you're still in the driver's seat.
Okay.
You set the parameters, you define your risk tolerance, and you can adjust the settings at any time.
So it's more like having a co-pilot.
Exactly.
That's helping you make smarter decisions.
Right.
Not completely taking over the controls.
Exactly. Think of it as a tool that empowers you to trade more effectively.
Okay.
It takes care of the technical analysis, the constant market monitoring, and the execution of trades based on your predefined rules. This frees up your time and mental energy to focus on the bigger picture.
That's something I really appreciate about this whole approach.
Yeah.
It's not just about chasing profits,
Right.
but about doing it in a systematic and controlled way.
Mm-hmm.
The emphasis on risk management is really refreshing.
Absolutely. Sustainable trading is all about managing risk effectively.
Yeah.
Right.
The Hedge Plus code and dynamic filtering system, combined with the automation capabilities of the Hedge Plus platform, provide a framework for doing just that.
And it seems like that framework can be applied to a variety of cryptocurrencies.
That's right.
Not just Ethereum and Solana.
The principles behind this approach are adaptable to different markets and asset classes.
Okay.
Of course, each market has its own unique characteristics and volatilities.
Yeah.
So you'll need to adjust your parameters and strategies accordingly.
So it's not a set it and forget it kind of thing.
Not exactly. While the Hedge Plus platform does a lot of the heavy lifting, you still need to be actively involved in monitoring your trades, analyzing market conditions, and making adjustments as needed.
That makes sense. No algorithm can predict the future with 100% accuracy.
Right.
So it's important to stay engaged and adapt to changing market dynamics.
Precisely. The Hedge Plus code and dynamic filtering system provide you with a powerful set of tools.
Right.
But it's up to you to use them wisely.
Yeah.
And that comes down to education experience and continuous learning.
Speaking of education, I'm curious to learn more about how the Hedge Plus platform actually works.
All right.
We've talked about its automation capabilities.
Right.
But can you walk me through the process of setting up a trade using the Hedge Plus code?
Of course. The platform is designed to be user-friendly, even for those who are new to automated trading.
Okay.
First, you would select the cryptocurrency you want to trade. In this case, either Ethereum or Solana, based on the data we've been discussing.
Okay, so far so good.
Okay.
What's next?
Next, you would define your risk parameters.
Okay.
This includes setting your stop loss levels, determining your position size, and deciding how much capital you want to allocate to this particular trade.
Okay.
Remember, this is where you exercise control over your risk exposure.
So you're not just throwing money at the market blindly.
Right.
You're making calculated decisions.
Exactly.
Based on your own risk tolerance and trading goals. Exactly. The Hedge Plus platform gives you the flexibility to customize your settings based on your individual needs and preferences.
Right.
Once you've set your parameters, you can activate the automation feature, and the platform will take care of the rest.
That sounds incredibly convenient.
It is.
So the platform will monitor the market, identify signals based on the Hedge Plus code, and execute trades on my behalf.
Yep.
All while adhering to my predefined risk management rules.
You got it. That's the power of automation.
Wow.
It takes the emotion out of trading, ensures discipline, and allows you to potentially capitalize on opportunities that you might otherwise miss.
Okay, I have to admit, I'm starting to see the appeal of this.
Yeah.
But before I go all in on the Hedge Plus platform,
I
want to understand the potential downsides.
All right.
Every strategy has its limitations, right?
You're absolutely right. No trading strategy is perfect, and the Hedge Plus code is no exception. One potential downside is that it relies on historical data and algorithmic patterns.
Right.
While this can be effective in many cases, it's important to remember that past performance is not necessarily indicative of future results.
So there's always the risk that the market could behave in unexpected ways, and the code might not be able to adapt quickly enough.
That's a possibility.
Yeah.
The crypto market is notoriously unpredictable.
Right.
And even the most sophisticated algorithms can be thrown off by unexpected events or black swan occurrences.
That's a good point. It's a reminder that no matter how advanced the technology is, trading always involves a degree of risk.
Exactly. And that's why it's crucial to approach trading with a balanced mindset, realistic expectations, and a solid understanding of risk management principles.